President Trump is focused on getting this housing market booming again. The last 4 years has been terrible. This president understands real estate. He understands housing better than anybody. We will fix this housing market. It's just a shame that we've got this massive headwind in front of us, which are these high interest rates. We got to reverse what happened these last 4 years to get the American dream back. Biden killed the American dream of home ownership. If we could get those interest rates down, I think you're going to see a building boom.
Federal Housing Finance Agency Director William Pulte speaking with Maria on this program about the state of American homeownership. Treasury Secretary Scott Bessent says that President Trump is now considering declaring a national housing emergency to address the affordability crisis. The median home sales price skyrocketing to nearly $420,000 last year. In 2016, that average was $305,000. Joining me now, Sotheby's International Realty Global Real Estate Advisor, Jenna Stauffer. And Jenna, your reaction to this? I mean, Treasury Secretary Bessent's like, we're trying to figure out what to do to help Americans afford to get into a new home.
So what this does is it really signals that housing affordability is a top priority, and it really should be. It is becoming the #1 source of economic anxiety for millions of Americans. Relative to income, housing affordability, it is at its worst level in 40 years. You have hardworking Americans with good jobs, with steady paychecks, and they are just finding home ownership slip further and further out of reach. The affordability ceiling, it's preventing transactions. So I am encouraged by this. The way forward is supply, and I think we do need bold moves from our administration to help with affordability. So if this were to go into place, I think that what this could do is it could put pressure on local governments, because this is where there's so many regulations, where there's so many barriers. This could put pressure on local governments to really remove some of these barriers, streamline the construction process, make it easier, faster, more affordable to build homes. And again, the solution to affordability, it all starts with supply.
And I'm going to ask you about the interest rate story, but if you look at what has happened to the U.S. housing market, it's not just mortgage rates, it's property taxes, association fees, home insurance premiums. And so, Lee Zeldin and the EPA can pull back all they can on regulations. That's really for new building and new construction. But all these factors are really hurting those that are looking to buy right now, or those that are looking to sell.
So I call it a lethal combination. And what Americans are facing, it's not just one thing. It's not just elevated rates. They're facing the rates, the prices, rising insurance, rising taxes, rising maintenance costs too. And again, it's this affordability ceiling. It is preventing transactions. That's why we'll probably end the year around 4 million in existing home sales for the 3rd consecutive year. And this is the lowest level since 1995. You put it into context, 2015 through 2019, we were averaging around 5.3, 5.5 million in home sales. And now we just continue to see fewer and fewer Americans be able to get into the housing market.
It's such a shame. And, again, if we get this interest rate cut, hopefully this month, Wall Street is expecting a 1/4 point cut, at least. They're expecting the Fed to cut at the next policy meeting. So, obviously that's going to, we think, impact mortgage rates. The 30-year, right now, the fixed, nation's most popular mortgage, that's at 6.5%. The 15's at 5.7%. But, there's some warnings out there that this rate cut isn't really going to have a big effect on the 30-year.
Right.
What do you say?
Well,
that would be unfortunate, I think.
It would be unfortunate, and that's what happened last time. When we did have the cut, you actually saw mortgage rates go up. But you have to look at the positive, and what it does is it starts the spin cycle of a lower rate environment in America. So I think that it's very necessary to have rate cuts. And whether we see them actually impact mortgage rates this year, it might not happen. But starting in 2026, I do believe that we will start seeing lower rates. And lower rates make such a difference, specifically for those first-time home buyers.
Yeah, absolutely. And, you know, at least that would be hopefully in time for the spring selling season. Before you go, I want to ask you about Florida, where you're based, because, you know, the economy's been cooling a little bit in the overall in the Sun Belt, but especially in some of these northern Florida cities. What are you seeing up there?
Florida's going through a correction. It's a necessary correction. There were so many cities in Florida that had parabolic price growth, and it really stretched income levels. Incomes and prices got so completely out of whack, and we're having this correction. It's not a crash. I think it's necessary for the Florida market. You have so many locals, you have working class Floridians that have been pushed out of the housing market. So we need to see income levels get back in tune with price growth. I believe in Florida long term. Our economy, it's like a well-oiled machine. People will continue to come to Florida for the business climate and also the tax climate.
Hey, and it's a lot of good sunshine there.
Yes.
Jenna Stauffer, great to see you as always. Thank you for coming in.
Thank you, Cheryl.